There will be signs. Yes, there will be signs. You'll know you're becoming profitable. There's a couple of obvious signs. Clearly, there's a couple of obvious signs that will tell you you're becoming profitable. 30 years ago, when I started trading, no one came to me and let me know that I was about to become profitable. Nobody told me when it was going to happen or how difficult it was going to be to become profitable. If you're about to give up and you're just not sure if you're ever going to become profitable or not, I'm going to go today and I'm going to give you 5. Yes, 5 signs that you could be about to be profitable or you've already become profitable in the markets. And the last one is going to shock you. Hey, it's Coffee with Rob. So for those of you who don't know me, I'm Rob. For those of you who do know me, I'm still Rob. And we're going to have a sip of coffee since it is Coffee with Rob. And then we're going to get to talking about the signs that you're going to be profitable in the market. At the end of the video, I'm actually going to give you a strategy that will actually make you profitable in the markets, a strategy that'll take you to the next step in your trading, because it's not the system that makes you the money. It's not the squiggly lines that make you the money. It's the business plan and the strategy that's going to make you profitable, that's going to make you the money in the markets. And as I say, at the end of this video, I'm going to give you that strategy and you can use it, don't use it, totally up to you. It's a 2 or 3 step business plan. It's so easy to use and so simple, because my whole philosophy on trading is keep it simple. Yes, keep it simple, stupid. It's not difficult. Don't make it complicated. Don't get all these overcomplicated systems and start looking for ways to like move the moon slightly to the left 5 degrees and turn it into green cheese or whatever the case. Just keep it simple and trade the easy way. And if you want to know what the system is that we use for high probability trading, just pop over and go and have a look at our other videos. The strategies are all there. If you want to know what I'm trading every day, what trades I'm taking, and what's best in the market and what the trade of the day is, do yourself a favor and join the membership. Join the membership every single day. I put a video out, trade of the day, what I'm doing. I look over the markets, and the reason it's in the membership is because it is a little bit extra, guys. Everything isn't for free in the world. Let's get to it. Let's talk about those 5 things that'll show that you're profitable in the market. So these are just a few things that will help you, that'll show that you're going on the right track. I think the last one's really going to shock you. The most important one, and the first one, is the sudden realization that you need a business plan in the market, that you need a business plan to trade with. You can't just go out there and just start trading. Yes, so many people get involved in trading. They do a course and they get involved in this course and they're straight into it, and we're going to be traders now. And off they go on the course and they pay. How much do you pay for a course? I don't know. You tell me. How much do you pay for a course? I'm sure it's expensive. It's a few $1,000s, isn't it? And you go on this course and you do really well on the course and you pass the course and you think, I know everything about the stock market now. And you go back and you think, I'm going to take trades now because I know all the abbreviations, all the terminologies. I can teach Rob about trading now. He knows nothing. He doesn't know these fancy words and terminologies that I do about the stock market. And I can read candles and I can read charts and I can do all these funny things. I learned all that in a week. Isn't that amazing? A week. Maybe it was less than a week. I don't know. And I've got all these videos. I've got all this information. I've got this whole book and this whole course which tells me how to trade. So I now know how to trade. And you get involved in trading and you start losing. You wonder, why are you losing? What's going wrong? What's happened that's causing me to lose? Well, the first thing that's happened is they taught you that the squiggly lines are going to make you money. And the second thing that's happened is they've taught you that a win rate is going to make you money, and that all you have to do is have an edge to make money in the market. They haven't taught you that psychology plays the major part, and they haven't taught you that you need a business plan to make money in the market. So I ask you this question. If you're planning to open a retail store on the high street, or you're planning to open a factory in the industrial area, and you're going to open this factory and you're just going to open it and just, what are we going to sell? It doesn't matter. We're just going to open it. It's fine. Don't worry about it. Just open it. No plan. Would you do that? I don't think so. I think you'd probably think, how much money do I need? What are the deposits on the shop that I need or the factory that I need? Do I need to buy the premises, lease the premises? Do I need staff? How much stock am I going to need? Do I need shelving? Do I need the floors done? Do I need to fit the shop out? Do I need conveyor belts in my factory? All these things before you get started. Number one thing in your business plan, you need capital. You're going to need a load of capital to get started. So funny thing is, when you want to start a real business, you have a business plan. But when you want to start trading, which is a business, you don't need a business plan at all. You just start trading with the hopes that you're going to make some kind of a profit. And then you don't. And you wonder why. Well, point one, you need a business plan. That's the only way that you can possibly find your way to making a profit. But in the strategy at the end of the video, I'll give you the business plan as well, because it's all part of the strategy. So you'll be okay if you keep watching. You'll figure this one out. But what's point two? When you realize that you're actually starting to become profitable, something that's suddenly in your arsenal that's said to me, you know what? I'm doing that, so I'm probably on the right track. Point two is this. You understand that the market is 50-50, that in all high probability, you're going to lose half, if not more than half of your trades. You suddenly realize that you might lose, and you're going to have to take some losing trades. And you're going to have to factor those losing trades into your business plan so that you can make a profit. So many people think they're never going to lose a trade. So many people get involved in trading thinking they're just going to win every trade. Now, I don't know if it's because you watched that other YouTuber that told you you're going to win every trade, or that a Lamborghini is going to fall out the sky. I don't know if it's that. I really don't. Or it could be that you went on a course and they told you that because you're buying this insane high probability system, that it's going to win you every single trade and you just can't lose. Some of them might be a little bit more realistic and tell you you're going to win 70% of your trades or 80% of your trades. But even that's a blatant lie. You're going to win less than half your trades. This is a fact. And the sooner you understand that you're going to win less than half your trades, the sooner your brain will start to compute and say, well, if I'm going to win half or less than half of my trades, well, then I'm going to lose. I'm not going to make money because I don't have the edge. The market's got the edge, because if I lose more than I win, then clearly I'm losing. Not if you have the business plan, not if you follow my strategy. While we're here, guys, remember, trading is risky. And if you don't like risk and you don't like losing money, you most likely, probably, shouldn't be trading. And by the way, if you want a free Forex book, drop down to the description, grab a free Forex book. And if you don't have the funding to trade, grab your funded trader account link there as well and start a challenge or get an instant funding. It's all there for you. What's point three? What's the third thing that you're going to realize? Oh, I've got this in my arsenal. Or, no, you know what? I might need this. Well, the third thing is you suddenly figure out, the aha moment whacks you on the back of the head. You need patience. You need to be able to sit on your hands. And you need patience. You need to wait for those trades to come to you. How many traders have I seen chasing the market, chasing the trades on a regular basis, just trying to take it. If there's no trade today, I need to take a trade. I haven't had a trade yet today. Why don't you wait till tomorrow? There'll be one tomorrow. There might be 5 tomorrow. But no, You need to take one. How many people have asked me, how many trades do you take? Or how long do you hold the trade? Or how much money do you make every day? Or how many trades should I take in a day? Those questions, they're like, how long is a string? You take the trades that you need to take. If the trade is showing you that it needs to be taken, if the opportunity is there, then you take the trade. And at no other time do you take the trade. You don't force the trade. How long should you keep the trade? As long as is necessary to keep the trade, man. How long do you want to keep it? I can only keep it for an hour because I'm only trading on the hourly. I'm only going to sit here for 2 hours, so I better get up and go. So I'll just close this trade. No, that's not how it works. You keep the trade for as long as you need to. If you go and buy a classic car to make a profit on it, or you invest in property to make a profit on it, do you decide that you have to sell it at a certain time to make that profit? Or do you wait for it to become more valuable and then sell it and make profit? Well, that's the same with trading. If you take something on as an investment, as a trade, the idea is that you want to make a profit of it at some time in the future. You want to make more money on it. You don't want to take a loss on it. So you don't want to put a time limit on when that profit is. You just want to make the profit on it. The sooner the better. But in some cases, it can take 30 years. In some cases, it can take 3 minutes. There is no time limit on making a profit. And there is no time limit on holding an investment or holding something that you want to make profit with. There is no rule or hard and fast rule as to how many trades you must take in a day, how many trades you must take in a week. Come on, guys. It's not that hard. Just think logically. Just keep what you need to keep. It's not that difficult. Cheers. So let's get to point number 4. We're getting really close to point number 5, aren't we? Well, we'll get there and we'll talk about it. And then I'm going to give you my strategy as well. The strategy that'll make you the money. That's insane by itself. But let's go and have a look at point number 4. And that is, you've gotten rid of the FOMO and fear. If you've gotten rid of the FOMO and fear, and I hate abbreviations as well. FOMO stands for fear of missing out. Fear stands for fear. But the fear of missing out is a really big one. And if you've gotten rid of FOMO and fear, then you are already halfway there. It's one of the most important factors, one of the most important things that's holding you back in your trading. If you haven't gotten over FOMO and you haven't gotten over fear, you are not going to be profitable in the market. You are not going to get over that hurdle and you are not going to get to that next step. FOMO is one of the worst things in trading. You go into a profit, you're $30 up when you're targeting 2,000 and you click sell because you just think it might go back into the red. That's part of FOMO. And the other part of FOMO is you see a trade starting to run, and instead of waiting for the signal to say buy, you take the trade because you think, I'm going to lose this. I'm not going to make that. It's going to run away without me. It's going to be off, and it's going to leave me on the train station, and the train's going to be gone. Called FOMO. And then you get into the trade, and it does exactly the opposite to you, and it takes all your money, which is what trading does. I just love trading for that. That's why FOMO works against you. Fear works against you. Fear is such a big one. The fear of losing your profit or the fear of actually losing. If you're a beginner and you've just got into trading, one of the big things that's going to happen to you is even if you're losing $1, you're going to start getting the adrenaline, you're going to start getting the sweats, because you know what? There's a fear thing in your brain, a fear, I think they call it a fear receptor. And it comes from the dawn of time when you were sitting in the cave and there was a saber-toothed tiger coming towards the cave to eat you and your family. And that fear kicks in, that adrenaline kicks in, and you have to start scrambling and finding your way out of the situation. In our times and modern times, when you're traders, that starts to kick in when you're losing money. Now, for most of us that have been here a long time, long as I have, and some of us lesser time, you learn to get over that. You learn your limits. You know that first bit of if you lose $5, it's stressful. You get to the point where you realize, okay, I'm quite comfortable losing $200 and I'm quite comfortable winning thousands. And that's how it goes. That is the situation you need to get to. In other words, if you're not comfortable losing $400 and you can't sleep at night, or you can't walk away from the trade, or you're constantly checking it, that's a sure sign that you've overtraded and you're not comfortable with the amount you're losing. To get comfortable with the amount you're losing is when you can take a trade, walk away from it, and you're not too worried about whether you lose that or not. But that also comes with point one, understanding the market's 50-50 and that you're going to lose. Because once you understand that you're going to lose, then you understand that there are losing trades, and you understand that the only way to make a profit is to make more on the wins and lose less on the losses. Effectively, the losses don't matter anymore. You just understand that you're going to lose that $200 and that's okay. You're paying for the trade. And if you've paid for the trade, you're quite comfortable about where it's going to end up. So understanding that FOMO and fear is one of your biggest obstacles. And if you can get over that, then you're halfway to your profits. What's the big one, guys? What's point number 5? You finally figure out that the money is in the strategy, not in the system or the squiggly lines. You finally figure out that the money is in the business plan. You finally figure out that the money is in the psychology, not in the lines, not in the edge, not in the system. The system will give you that high probability trade. The system will tell you that you've taken a good trade, and in all likelihood, it's going to go your way. Well, in all likelihood means 50-50. In all likelihood, you'll probably lose more than you win. And once you figured that out, once you realize that you need the strategy, not the system to make you money, then the aha moment comes to you. This is the one that blows your mind. You don't make money from the systems. You make money from the strategy. It's mind-blowing, but it's true. And so many people struggle to get their minds around this because they've been taught on their course that that system with the squiggly lines will make them loads of money. They've been taught on the course that that system's always going to make them the profits. They've been taught on the course that that system gives them the edge to make money in the market. What they don't teach you, and this comes with the final point 5, is that you're trading against human beings. You're not trading against maths. You're not trading against algorithms. You're trading against or with human beings. Now that's the mind-blowing bit. Understanding that the stock market's not about charts. It's not about squiggly lines. It's about people. You are buying and selling from other people. Now, how do you have a business plan and a strategy and a psychology that's actually going to work for you? Well, I'm going to give it to you right now. So listen very carefully and don't miss a beat. Don't miss a thing. Listen very carefully, and I'm going to give you the strategy that will make you money in the markets if you follow it. But it's my strategy. This is not financial advice. Nothing I say constitutes financial advice. This video is for entertainment purposes only. And what you learn from me, you can use, don't use. It's totally up to you. Not forcing you to do anything. But if you follow this strategy, you will in all likelihood make good money in the markets. And the strategy is super simple, super easy, not a complicated thing in it. And it's also a 3-part business plan. And this is it. If you have, now I normally use the adage of a $100,000 account or a $25,000 account. So if you want an account that size and you don't have the money for an account that size, get yourself a funded account, instant funding or a challenge account or whatever, and get into the market and simply take your profits out as soon as you've got them. I have left a link for you in the description if you need a funded account that lets you trade our way and lets you trade over the weekends, lets you trade the news, and lets you do whatever you like. So if you want an account like that, go and grab one. They're really cheap. You can get a $25,000 account for $100. What the hell? It's nothing. And if you lose it, you lose $100. If you win, and you win a couple of thousand, then you put that in your bank account and you're kind of in a profit, as far as I can tell. Yeah, you'll be in a profit. How do you work with a strategy? Let's use the $25,000 account as an example. It's quite easy to use then. Most of you might have the cash to do this. I've noticed on the little survey that I did that most of you do have cash accounts to run with. So run with your cash accounts and keep them safe. So you got a $25,000 account. My policy is to risk 1% of the account on every single trade. You can choose whatever percentage you like. I just find that 1% works really well for me. Might not work so well for you, but it works really well for me. 1% of $25,000 is $250. That's $250 per trade, every single trade that's risked. If I take 10 trades and I lose them all, which is unlikely, but if it happens, you lose 10% of your account, which is recoverable. My goal is not to make you rich here. My goal is to make you competent and to keep you in the game. That's what we want to do. We want to keep you in the game. You've risked $250 per trade. How do I take that trade now? Really simple. You go in and you see the trade that you want. This is the trade that I want to take. You take that trade, you look at it, you say, where will I put my invalidation here, my stop loss? I call it invalidation because you need to look at the trade and say, if the price gets to that point, this trade will be so invalid to me that I wouldn't take this trade with your money. I don't want that trade. That's your stop loss point. Now you work out how much $250 is to the cost. Back to that, how many lots, how many pips, whatever you're trading, okay? Some of you are only trading Forex, some of you are only trading crypto, some of you are only trading indexes. I trade it all. Doesn't matter to me. As long as it's tradable, I'll trade it. If you tell me orange peels are tradable, I'll trade them. Because it's tradable. It's just a market. It's human beings buying and selling from each other. That's all it is. $250 back to the cost. How many pips, how many lots? Work it out. Now you've got the size of your trade. Now all you've got to make sure is that you've got a good risk to reward. Because you don't want to be losing $250 and only targeting a $40 profit. That's just insane. That's not worth it, is it? Surely you want to make more than what you're losing. Now, I don't mind if you take a 1-to-1. If you can make $250 on the trade, then take it. But obviously, it's better if you can make $350, $400, $500 on the trade. Try and go for 2-to-1. But make sure that the target's achievable. Don't just say, I'm going to make a 2-to-1 trade here. Try and make an achievable target. You can see on the chart, it's going to make that profit. That's a good trade. That $250 doesn't have to be exactly $250, guys. You can make it 260, 270, 220, 230. Just fit it in there, guys. Don't be insane about it. Don't be pedantic about it. Just close by. It's not a hard and fast rule. Just keep it in that area. Because the reason I have that rule, it is an important rule. If you lose many trades at that value, the idea is you know exactly how much you're losing on every single trade. One trade isn't wiping out your account, because if you're scalping, that's what happens. You're trading, and then one trade takes out all those wins. Now, you lose a couple of trades at that value. You know exactly what percentage you're losing, and you're trying to make more on the wins, on the upside. The trick here is when your trade goes into the win, heading towards your target profit, try and take your stop loss up to cost if you can, so that the trade's now costing you nothing. Because you must remember, when you put that stop loss in, effectively the trade is costing you $250. When you take it up to cost, it's costing you nothing. So you've lost nothing if that goes back and takes it out. Everybody says, oh, well, I got taken out at cost. You've lost nothing if it does that. And if it goes into profit, you make some more money. Guys, that's as simple as the strategy gets. Don't just take your profit, follow your stop loss up behind it, and try and make as much as you possibly can. Put a trailing stop, let it follow it up. You'll have a whole lot of small mishmash profits and smaller profits from the stop loss coming back and taking out trailing stops or break evens or whatever the case. Just accept that. You're looking for those big ones. There's a company out there that used to, massive company, used to take massive trades. You had people working on the shop floor. They used to win 2 trades out of 10, and they were more profitable than most of the other companies on the same block. So don't think that winning more of your trades makes you the wins. Winning more on the individual trades is what makes you the wins. The losses don't count. You can get out of the losses early, do so. The earlier you can get out of the loss, the better it is for your account. If you want to know more about my system on high probability trading with the charts and that sort of thing, go and watch my last videos. And if you want to know more about my strategy, I think you know enough about it. You're more than welcome to watch those videos as well. Guys, don't forget, like, comment, and subscribe if you enjoyed the video. I do hope have helped you in some way or another. Join us for the live shows on the Tuesday and the Thursday as well, where we all sit together and we choose trades on the funded account together. Thanks for watching, and until the next one, keep your feet on the ground, reach for the sky. Cheers, ciao, bye.